Russia and China's interest in cryptocurrency. The relevance of cryptocurrencies, particularly Bitcoin, has grown significantly over the last decade. The crypto economy has enormous promise, but its largely decentralized form also offers risks. Cryptocurrency is a high-risk investment due to the lack of a regulatory authority to monitor and control operations related to such digital transactions. Crypto has a volatile nature, since it is backed by only a few investors or market sentiment, foreshadowing the volatility and weakness it can induce into the economic system as a whole. Financial professionals consider cryptocurrencies as the most serious threat to the financial system and feel that quick action is required to maintain control of that system. Several central banks have developed a national digital currency in order to keep control over the system and minimize any shifts in it. However, many governments continue to oppose the concept of a digital currency, claiming that creating one will simply render the financial system more vulnerable to possible cybersecurity attacks, such as ransomware and financial stability issues. Before we continue, please note that this video and other ones on this channel are purely for educational purposes. They are not to be taken for financial advice. Always make a wise investment decision by investing the amount of resources you can afford to lose. Will China reverse her stand? This summer, news of a conference in Dali, a city set among 4,000-meter peaks in China's southwest, began to circulate on Chinese social media. The organizers expected less than 200 attendees, yet the event sold out. The facility was designed for 1,000 people, but more than double that number eventually showed up for the August event. The gathering's topic? Cryptocurrency, which China's government deemed mainly illegal a year ago. Prior to the crackdown, China was developing as the crypto world's epicenter, generating massive exchanges like Binance Holdings Ltd. And the largest Bitcoin mining operation. Beijing's decision to outlaw cryptocurrency trade and mining, announced in September 2021, appeared to be aimed at eradicating the whole domestic economy. This is not how things turned out. Instead, a mix of corporations adhering to the Communist Party's mission, pushing state-sanctioned blockchains and the digital yuan, rogue Bitcoin miners, and crypto entrepreneurs attempting to build their young businesses without crossing any imagined red lines has arisen. Because digital assets such as Bitcoin and non-fungible tokens are at the center of what proponents like venture capitalist Mark Andreessen refer to as Web3, or the next version of today's internet, how China treats the crypto sector's remains will have significant repercussions. According to Jason Kam, founder of Folius Ventures, an investment firm focused on Asian crypto businesses, China has 3 red lines: crypto trading, over-the-counter transactions, and mining. At its core, the Chinese government will restrict speculation and capital outflow. But for the rest of Web3, such as engineers building code, the government will keep one eye open and one eye closed. Interviewers with over a dozen industry participants stationed in China, ranging from founders to programmers and operations professionals, give a picture of a sector attempting to find its footing by experimenting with new products and services in the hope that regulators will not crack down. They all wanted not to be recognized for fear of drawing the attention of the government. Researchers at Chain Analysis Inc., who track crypto usage globally, saw an unexpected occurrence earlier this year. China was gaining ground on other countries, to the point where it now ranks 10th in Chain Analysis' latest Global Crypto Adoption Index, up from 13th in 2021. Our data suggests that the restriction has either been ineffectual or has been enforced inconsistently, they stated. Xi Jinping maintains his stance. Early in November 2019, many Bitcoin enthusiasts applauded China's President Xi Jinping for backing blockchain technology. The president's commitment to encourage blockchain development in China unintentionally pushed the price of Bitcoin, surging by 42% in a matter of hours. Stocks in Chinese blockchain A-share enterprises also reached their 10% limit the following Monday. However, in the aftermath of the president's hysteria, he had forcefully set the record straight. Xi Jinping has been extremely public in his efforts to remind the world that he is not a fan of cryptocurrencies since his endorsement of blockchain. He's also not the crypto dad that many Bitcoin enthusiasts and social media users have dubbed him. China is interested in blockchain technology because of its immutability and extraordinary tracking capabilities for financial applications, supply chains, and local governments. The story is still blockchain, not Bitcoin. In reality, rather than loosening China's hold on Bitcoin and other cryptocurrencies, it appears to be tightening. During one of his interviews on CCTV, Xi Jinping labeled cryptocurrency as unregistered security, financial fraud, and illegal Ponzi. Furthermore, Bloomberg reported that two major cryptocurrency firms, Binance and Tron, were banned from the famous Chinese social media platform Weibo. In addition to a social media crackdown, Shanghai watchdogs issued a notice to clean up cryptocurrency trading enterprises. Beijing has also issued a warning against unlawful exchange transactions. The Chinese Central Bank and Shanghai's Financial Authority also encouraged local government entities to either stop doing business with cryptocurrency companies or do so exclusively under their supervision. Russia to the rescue? In Russia, however, the situation is rather different. Vladimir Putin signed legislation on digital financial asset (DFA) transactions in July 2020, which legalizes cryptocurrency transactions but forbids them from being used as a payment for goods and services. Russian banks and exchanges can operate DFAs if they register with the Bank of Russia, the country's central bank. The Bank of Russia has the authority to maintain information system registration, register DFA operators, and regulate the business of information system operators. Parties must have declared Bitcoin transactions and their possession of cryptocurrencies in order to challenge them in court. According to the law, cryptocurrency is an accumulation of electronic data capable of being accepted as a payment means, not being a monetary unit of the Russian Federation or a foreign state, and as an investment. The law further states that digital currency cannot be used to pay for any products and services at the same time. DFAs are defined by the law as digital rights consisting of money claims, the ability to exercise rights under negotiable securities, the opportunity to participate in the equity of a non-public stock company, and the right to claim transfer of negotiable securities stipulated in a DFA resolution. DFAs can be sold, bought, swapped, and pledged, but they cannot be used to make payments. Failure to report twice in 3 years, or intentionally supplying misleading information to Russian tax officials is a serious criminal violation. If a taxpayer fails to record transactions of 45 million rubles, $615,000, or more in 2 of the previous 3 years, they face fines ranging from 500,000 to 2 million rubles, 5 years of forced labor, and up to 5 years in prison. Financial fines, forced labor, and shorter detention periods are among the penalties for unreported crypto transactions worth less than 45 million rubles. Recent reports suggest that Russia may use its domestic digital currency to settle international trade. The country is currently in the pilot phase of its central bank digital currency development, CBDC. According to a Reuters story, Russia intends to use the digital ruble for mutual settlements with China by next year. The digital ruble is now being tested for bank settlement and is scheduled to be finished early next year. In the third week of September, the U.S. Treasury Department added 22 individuals and 2 Russian-based businesses to the sanction list. With the West's increasing sanctions against Russia in the aftermath of the protracted conflict with Ukraine, the country has been actively seeking other financial and trade routes. Cryptocurrency to the rescue. Putin's belief. Russian President Vladimir Putin believes cryptocurrencies have value, but he is skeptical that they can replace the US dollar in oil transaction settlement. In January 2022, Russia's central bank suggested a ban on cryptocurrency use and mining on Russian territory, citing concerns about financial stability, residents' well-being, and the country's monetary policy autonomy. For years, Russia has argued that cryptocurrency may be used to launder money or finance terrorists. It eventually granted them legal status in 2020, but prohibited their usage as a payment method. The Russian central bank warned that speculative demand was primarily responsible for cryptocurrency's quick growth and that they exhibited features of a financial pyramid, warning of potential market bubbles endangering financial stability and residents. The bank has proposed that financial institutions refrain from doing any cryptocurrency transactions and that measures be devised to restrict transactions involving the purchase or sale of cryptocurrencies for fiat currency. Crypto exchanges would be included in the proposed prohibition. 2 countries, 2 cryptocurrency drivers. Proponents of Bitcoin, BTC, say that the reason Bitcoin and other cryptocurrencies were established, to hedge against fiat currency volatility, has arrived, and now is the time to buy digital assets. According to Patrick Tan, CEO of Novum Alpha, a quantitative digital asset trading platform with MAS-regulated funds catering to accredited and institutional investors. Chinese investors may do just that. Needless to say, Chinese investors may snap up cryptocurrency. With the increase in total transactions in cryptocurrencies in China and Russia, despite the official ban and partial usage, the impact of these two countries continues to have a stronger effect in the cryptocurrency world. Also, the ban on Russian access to United States dollars as a result of the Russia-Ukraine war will be another catalyst in the world of cryptocurrency. In fact, Russia has been up for a system that relies exclusively on digital currency. In times of war, bitcoins can be utilized for fundraising. Notably, the Ukrainian government began taking Bitcoin donations at the start of the year in an effort to broaden donor inclusion, which resulted in the establishment of the Crypto Fund of Ukraine. The war between Russia and Ukraine has highlighted the use of cryptocurrencies in communal effort situations for the common good. While the Ukrainian government has received millions of dollars in direct crypto donations, some digital currency fundraising efforts have been thwarted by scammers looking to benefit from the conflict. More crypto benefits and drawbacks are expected to emerge when use cases evolve in more diversified situations. When it comes to cryptocurrencies, the globe is plainly divided. On one side, proponents such as Bill Gates, Al Gore, and Richard Branson argue that cryptocurrencies are superior to traditional currencies. People who are opposed to it include Warren Buffett, Paul Krugman, and Robert Shiller. Krugman and Shiller, both Nobel Prize winners in economics, see it as a Ponzi scam and a vehicle for criminal activity. There will be a clash in the future between regulation and anonymity. Governments may wish to regulate how cryptocurrencies work because several have been tied to terrorist activities. On the other hand, the primary goal of cryptocurrencies is to keep users anonymous. Will we have a future brimming with cryptocurrency transactions? Only time will tell. Do not forget to like this video and subscribe to this channel if you are yet to do so for more educative and financial videos.